Well, great seeing you once again. Welcome to Fred Talks. It's good to spend this day with you and share with you something new and a question that I've been getting from a lot of you. Now, many of you want to buy a home, and the question is, what is my FICO score? And first of all, what is FICO? FICO is known as the Fair Isaac Corporation. This is a credit risk number that is assigned to you and I and every American here so that we know our credit worthiness when it comes to borrowing money from a lender. So how does it get calculated? People ask. How does it even matter and what is it? The FICO score ranges from a 300 score to an 850. Now what that means is between 300 and 499, if you have that score, that's considered very poor. And about 5% of the population in the United States have that score. Between 500 and 600, that means your score, whomever, it means it's poor. And about 21% of our population have that score as well. Between 601 and 660 means your score is fair. About 13% of the population have that. 661 to 780 means you have a good FICO score, and about 38% of the US population have that as well. Now here's a good one. Between 781 and 850, you have excellent credit, an excellent FICO score, and about 23% of the population in the US have that score. So what makes up that number? It's important to understand that 35% of your FICO score, your credit score, is based on payment history. So it's important that all of the credit cards, bank accounts that you owe money to, installments, car payments, mortgage payments, wherever you are borrowing money and are reporting your credit to any of the three reporting FICO score organizations, which is Experian, TransUnion, and Equifax. They are the ones, all three have a different number, fairly close, but they are the ones that are actually compiling your FICO score. So 35% is your payment history. 30% is how much you owe. Banks want to know if you are using all of your current available credit, meaning your credit cards or any mortgages or car payments based on your income, specifically how much credit you are using. Are you overextending yourself? So they look at how much of your credit is being used and to see if you're at potential risk of defaulting. So the next one is new credit is 10%. 10% depending on how many times you are applying for a credit card or a loan in a very short amount of time. That determines if you are at risk as well. 15% is the length of your credit history. So the longer your credit history, the better your score. Please know that no credit score, if you don't have a credit score yet, is usually better than having a bad credit score. So that was 15% on length of credit history. And the last one is your credit mix. What are you using and what types of credit are you using? Credit cards, mortgage payments, car payments. They're also known as installment accounts, so the ones that you're making payments continuously, whether to a bank or to another source, furniture, whatever that may be. So keep in mind that all of those items comprise of your credit score, which determines whether you can buy a house, or you can buy a car, or you can get more credit cards. So please keep your number in mind. And you can always go, to learn about My Credit Score at Credit Karma or any of those free organizations. Know that your credit score changes by the day in general because, again, length of time and amount of credit used is what you're applying for. So keep in mind that if you're choosing to buy a home, this credit number is valuable and very important if you're not buying in cash for you to get your mortgage loan. So hopefully this information helps, and reach out to me again with any questions you may have. And again, I'm here to help you and understand the process of buying a home and what it takes to purchase one. So DM me, call us, message us, and we'll be happy to help you. So loyalty, passion, results. Thank you again for listening.